things for themselves. Feeding yourself, clothing yourself, bathing yourself, moving yourself. Those are all long-term care things. Now, with a long-term care policy, those are known as ADLs. So the feeding yourself, clothing yourself, bathing yourself, moving yourself, all of those are known as activities of daily living, ADLs. And it's typically, every state is a little bit different, but most states will say that a person needs to be unable to do 2 to 3 ADLs in order for the policy to trigger and provide coverage. So when a person, you buy a long-term care policy, so that it's kind of just think like nursing home coverage. If you're an elderly person and you're going to go into a nursing home, that's what long-term care is going to pay for, is for your nursing home. It's not about being sick. It's not Medicare. And in fact, long-term care and Medicare do not crisscross. They're not the same thing. Long-term care is about nursing home, just feeding yourself, clothing, somebody to help you clothe yourself, feed yourself, bathe yourself, take care of yourself. That's what long-term care is all about, and those are the ADLs. Now, what do we need to know about a long-term care policy? One, you need to know that at a minimum, the benefits, the policy period benefits need to be for at least 12 months. That means that if you buy a policy, the coverage available needs to last for at least 1 year. Not that the policy lasts 1 year, but that once the policy is triggered to provide coverage, at a minimum, it needs to provide 1 year worth of coverage. So at a minimum, a long-term care policy needs to be 12 months long-term care, at least for 1 year. Some states do say 2 years, but most states are 1 year. And of course, people will probably buy a longer policy than that. It's just that the minimum is 1 year of coverage. What we also need to know about a long-term care policy is the elimination period, which is the deductible. So in long-term care, you don't pay, like in car insurance, you crash your car, you got to pay deductible, they fix it. In long-term care, you don't have to pay anything to the insurance company, but you will take care of yourself for the first month. So in the first month that you cannot do your ADLs and you go into a nursing home, you will have to pay the bill for the first month to the nursing home, where they will document and confirm that you aren't able to do your ADLs. And then you will be triggered into, once you take care of yourself, for a 30-day elimination. So most long-term care policies, some states have an exception, but most states have a 30-day waiting period in a long-term care policy where you take care of yourself, you go to the nursing home yourself, pay the bill yourself, they will document your ADLs, and then your policy is triggered to provide coverage, and that's when the long-term care coverage kicks in. Now, what coverages are available on a long-term care? What are you going to get covered under long-term care? One of the things that you'll get covered is known as skilled nursing. Now, skilled nursing is generally where you're going to be at a facility, and there's going to be a nurse who's like on the clock, like round the clock. Somebody is coming to check on you. That's going to be skilled nursing. So skilled nursing is a medical professional, usually at a facility, actually always at a facility, and it's round the clock care by a medical professional. Intermediate, on the other hand, oh my God, I don't know if the sun is like in a different direction. Maybe it's glaring off of the phone. I don't know, but my eyes are starting to get weird. Intermediate is also by a medical professional, but the difference between intermediate and skilled nursing is that intermediate is occasional, and that's the word you really want to attach to the phrase intermediate. Intermediate, occasional, intermediate, occasional. Intermediate is occasional care by a medical professional. This could be that you go to them, you go to their office, like maybe you go to rehab like 3 times a week. That would be an example of intermediate care. Or maybe they come to you, maybe a social worker comes to your house. That could all be part of intermediate care. Then you have home health care. Home health care is a program established by your doctor that basically allows you to receive the same nursing home treatment but at home. That would be home health care, and as long as your doctor approves it, you can have the home health care. Then you have also custodial care. Custodial care is the person who is taking care of your ADLs. This is the person who helps you clean yourself, bathe yourself, move yourself. Those are all the ADLs. Your custodian is your ADL helper, helping you do all your activities of daily living. And your custodian does not need to be a medical professional, where skilled nursing and intermediate, they do need to be a medical professional. Custodial care does not. And in fact, your own family could be your custodians, and they could be paid out on the policy by that. I think the sun is moving and it's bugging me. All right. Anyway, then you also have adult daycare. Adult daycare is exactly what it sounds like. So let's say you are the custodian. Let's say your mom has Alzheimer's. She's staying with you. You keep her in your, she has like a bedroom. You got to watch her, because otherwise, she'll run off because of her Alzheimer's. She forgets things. So she needs to have somebody watching her all the time and helping her. And so you take care of her during the day, but then you take care of her at night, but during the day you got to go to work. Adult daycare is where you could drop her off at a facility and they will take care of her. They'll feed her, they'll do activities with her, they'll take care of her all day, and then you come and pick her up. So that would be like adult daycare. Then you also have respite care, and respite care would be a break or a relaxation for you. If you're the one who's primarily taking care of your mom and you need sorry, my nose is running. You need a break, then respite care is the coverage that you will use. So this is like coverage, like almost like babysitting. So if you need a night out, you need a weekend to go do your pedicures or whatever, you can hire a respite care provider who will come into your house and watch your mom for you while you are away. So that's a respite care provider. The difference between adult daycare and respite care, which is important to know, they like to ask about that, is adult daycare is not 24 hours and it's at a facility, where respite care is in your home and it's relief for the caregiver. Now, all of these coverages are what's available on the long-term care policy. And what's another important thing to know about the long-term care policy is that each of these coverages pays out on a dollar amount per day. So like skilled nursing may say like you get $600 a day for skilled nursing. Now, even if the bill only comes out to $550, so let's say they only charge you $550 a day for skilled nursing, your policy will still actually pay out $600, which is quite a big difference compared to like other policies, which only will pay out what you are, what the bill actually is. Long-term care is unique in that it will pay the full amount of what it says no matter what. My phone is glaring really bad. 1 second. I can't pause it. It's not a video. It's live. Okay, that is a little bit better. Okay, so what were we talking about? Oh, so they will pay you the full amount. They will pay you whatever amount of money they said that you have. So even if the bill is only $550, they're going to pay out the full $600 because that's what's listed as your coverage amount. That's a unique thing about a long-term care policy, is they just pay exactly what it says it's going to pay, whereas other insurance will be like health insurance, medical insurance, disability insurance, whatever, will be like, what is the actual bill? We will only cover the actual bill or less than the actual bill. Sometimes where long-term care pays, we say we're going to pay $600, we're going to pay $600, that's it. Which means that you may have excess money. You may have extra money given out to you from your long-term care policy that you don't need. It is possible that that money can be taxed. So if you receive excess money from the long-term care policy that you don't need, they can potentially tax you on that. So you want to remember, excess can be taxed, excess can be taxed. So that's a quick summary of the long-term care policy, knowing that at a minimum, it has to be 12 months of coverage. It's you have a 30-day elimination period at the beginning where you have to pay for the nursing home yourself. You have your different levels of coverage. You have skilled care, which is a nurse at a facility. You have intermediate care, which is occasional nursing or rehab or a social worker coming to visit you. You have custodial care, which is someone to help you with your ADLs. You have you're moving, you're cleaning, you're bathing yourself. Those are your ADLs. And the custodian does not need to be a medical professional, whereas skilled and intermediate must be a medical professional. You have adult daycare, which is generally at a facility and less than 24-hour basis. You have respite care, which is the babysitting relief for the caregiver. And all of those are a dollar amount per day, and they will pay you the exact dollar amount regardless of what the actual bill is. And if you end up getting excess money, the excess may be taxed. Now, in addition to knowing about long-term care and all the things that I just said, they do have a lot of marketing and rules about long-term care. So the elderly population is susceptible to scams, being misled and cheated. And that is something that, as an insurance agent, if you're going to be in the health insurance, the long-term care space, or the Medicare space, you're going to have to be hyper aware of how you have to be careful not to mislead, misinform, cheat, or hurt any part of the elderly population when you're selling insurance coverage to them. So long-term care comes with a lot of rules, regulations, and standards about how you're allowed to talk to people about long-term care. Every state could be a little bit different, but there's a couple of things about long-term care that can be the same. One of them is that when let's see, kind of lost it for a second. Just trying to think of, like, every state's a little bit different. So I'm like, what is the most common thing with the long-term care marketing? One is you just have to be honest. You cannot misinform them, right? You need to make sure that this is suitable coverage for them, and they can't lose it. And then let's see. So pay attention to the marketing rules, and the marketing rules for long-term care and Medicare tend to be the same. They're both, an elderly population. And then there's usually a coverage that you can add to the long-term care. They like to ask about this one, which is inflation protection. So if you were to buy your policy today, and let's say today the general rate for skilled nursing is $600, so you pick your coverage amount at $600. But let's say you don't use your policy until 10 years from now, and now the general rate for skilled nursing is $1,000 a day, but your policy is only listed at $600 a day. Inflation protection is what would allow your policy to boost up the coverage amount according to inflation, according to what the new amount of money, the typical charge is for that service. In Ohio, they want you to remember that that at a minimum you have to offer 5%. Not that the person has to buy it, but that it is imperative that the insurance company tell the person, hey, you're buying this policy, you can also buy this coverage, which will give you inflation protection, and you must tell the customer this, and they can choose not to buy it, but you have to inform them, you have to tell them of this inflation protection coverage. And I just remember that in Ohio, because I taught so many classes in Ohio. Probably the state I taught in the most was Ohio, and Colorado, and Miami. And yeah, those are the big ones. Texas was a big one. Anyway, so you have to offer that inflation protection. Another cool thing about long-term care policies is that they have this little like emergency contact thing. I forget the official name of it, but their long-term care policies, again, are traditionally bought by the elderly population, older people. And a lot of them don't like online web bill pay. They don't like EFT. They don't like automatic drafts, right? They want to call in and make their payment, or they want to go to their agent and make their payment, which is fine. But let's say that like grandma misses her payment, and grandma's, just a few years away from a nursing home, but she wants to be as independent as she can for a while. So we have the long-term care policy in place so that when she's ready to go to a nursing home, we have that set up. And let's say she forgets to make her monthly payment, and the policy is going to lapse. Part of buying long-term care requires that you actually set up an emergency contact. So grandma, when she buys her policy, would have to put in there, please call Melissa if you can't get a hold of me. And she has to designate me and give them my phone number so that if and when she misses the payment and they can't get a hold of her, they can call me and they can say, hey, grandma hasn't made her payment this month. We've tried to call her. She isn't calling us back. And grandma's ignoring it because she doesn't recognize the number, right? And so they call me and I say, oh my gosh, let me make the payment, or let me get grandma to make the payment. You have to have this like emergency contact on the policy, and it's required. It's not something that is like optional, like you have to do it. And in fact, if you don't want it, you have to actually sign a piece of paper that says, I don't want to have this, emergency contact person. And it's not called emergency contact. I forget the name of it. I'm so sorry. But the concept is the same, that they have to have somebody that they can call and say, we haven't received the payment. Can you make the payment? Now, another cool thing about long-term care is generally it's a policy where you can't lose the value of it. So like with car insurance, if you pay your premium and you never use it, you'll never see that money again. Like, it's gone. With long-term care, that money is actually still yours in a way. And if let's say you buy this big long-term care policy, and it will last, as soon as you're in a nursing home, it will last the rest of your life. It has all these amazing coverages on it. maxed out to the nth degree, and you're paying the premium on it, paying the premium on it, paying the premium on it, paying the premium on it. 10 years go by, you're still paying the premium on it, and then you get to a point where you can't afford it anymore. And it's like, is it over? No, it's not over. They will take the money that you paid and they will apply it towards a different, cheaper policy so that you at least still have something. You still have some coverage available. And that's called non-forfeiture, that you can't give up the value of your policy. If you've paid, you know, $10,000 of premium into this policy and you never use it, or not never use it, but you can't afford it anymore, they can convert it into a cheaper policy that's already paid for based on the money you were paying for that big, huge policy. So those are some quick important things about long-term care that you're likely to see on your exam. So I just wanted to share that with you. If you have dropped a comment below, I can't see them for some reason on Facebook, so I will come in and answer any questions after the video is over. And again, this video will be uploaded to YouTube. Make sure that you watch the YouTube channel, you're subscribing to the videos, and any other content or things that you want me to talk about, drop that in the comments below and I will make videos for that. So I'm sending you all the loves, all the vibes for you to pass your exam. You guys have a wonderful day. Finish.